Welcome in guys, Mr. Moneyman here. So as some of you previously requested in the comments section of one of my earlier videos, I decided to make a video all about, you guessed it, the airlines industry. Now, some of you may be wondering why the stock prices dipped so far down, and there's an obvious answer. It's the COVID-19 pandemic. And now that we've started to get some good news from the pharmaceutical companies such as Pfizer and Moderna getting emergency use authorizations for their COVID-19 vaccines, some of you guys are probably wondering if this is enough news to get back into these stocks. Now, as great as this news is for the world, there are some other factors that you also might need to consider before you get into these stocks and before people start packing their suitcases on a daily basis. But enough small talk, let's dive right in. So the vaccine is here, so it must be time to buy airlines again, right?
Buy!
Wrong! In my opinion, even after the vaccine is rolled out, people are still going to be hesitant traveling like they did before the pandemic. Now let me ask you this. Once the vaccine is fully rolled out, are you going to be comfortable traveling like you did pre-pandemic? Let me know in the comments below. And besides just comfortability and volume of leisure travel, we also have to analyze some of the major things that have happened within these airline companies over the past 10 months, and how these things are going to affect the stock price in the long term. Not only that, but one of the airline's biggest customers, businesses, may change the way that they do travel, and this might be one of the biggest reasons that these stocks do not recover to pre-pandemic levels. Now before I dive into all of this, I just want to quickly remind all you guys to smash that like button below, and please subscribe to the channel so you don't miss out on any future content. And if you're new to the channel, welcome in. I hope that I can provide some value to you and get you on your own path to financial freedom. But anyways, we all know that the airline industry had struggled a lot after the pandemic had become a reality. But do we really know by how much? I'm sure we all heard about the different furloughs and layoffs that happened throughout the year. But one of the things that I think flew under the radar is the amount of debt that the airlines took on and the amount of shares that they had to throw into the market just to stay afloat and get their cash to keep up with their daily cash burn. So to start this off, let's take a quick look at some of the charts of some of the major players in the airlines industry. These include Delta Airlines, American Airlines, United Airlines, and we'll even throw in the ETF for the airlines industry, JETS. So when the huge drop-off happened here in the March timeframe and the demand went way down, airlines realized that they needed some major cash to keep their businesses running. Because of course, it takes a lot of employees and a lot of daily materials to keep everything in running. You may not believe this, but it's actually about $25 to $30 million per day, which is an unfathomable amount of money for most of us. So what did the airlines do? First, they started taking on debt, and second, they started throwing more shares into the overall outstanding shares in the stock market so that they could take on cash and keep up with their daily cash burn. So let's take a quick look at some of these airlines and why this matters. We'll start off with United Airlines. They added 39 million shares into the market in April and another 28 million shares in June to give themselves about $17 billion of cash to keep them afloat. This accounted for almost 10% of their total existing shares, so that's quite a lot of dilution. American Airlines did something very similar. They sold 74 million shares into the stock market and sold $1 billion worth of debt. And even after that, this is leaving them with a very weak balance sheet, as this debt is going to add another $65 million in annual costs via interest on this debt. Now this again was just to stay afloat. And of course, we can't forget about the company that is usually Mr. Reliable when it comes to travel, and that's Delta Airlines. Like American Airlines, Delta also took on some debt, and their debt was actually the largest debt offering in the history of the airlines industry, $9 billion. Can you imagine the amount of interest they're going to rack up and have to pay annually on this debt? And just to remind you, this was just to stay afloat, not to grow or expand their businesses. So why is looking at this debt and all these extra shares important? Well, the reason is because when there are more shares available for investors to buy in the stock market, it actually takes the value of the share and it dilutes it, and it makes each share less valuable. So for those of you that think that these stock prices for these airlines are just going to magically come back up to what they were pre-pandemic, you are in for one big surprise. And this isn't the only reason actually. The other big reason that I believe that these markets are going to take a long time to recover is because of the business demand for travel and how businesses are changing how they work. So before we talk about demand though, let's look at a quick breakdown of how airlines made their revenue before the pandemic. So pre-pandemic, about 60% of airline revenue came from passengers directly, and the other 40% came from the airlines selling their frequent flyer miles to other companies, such as hotels and other travel partners like rental car agencies or credit card companies. And out of that 60% of actual travelers, business travelers usually accounted for 75% of the airline's profits. And not just due to the fact that they might pay more for tickets and not always be looking at the cheapest seats like most of us usually are, but also because business travelers usually end up paying for additional services or comforts that normal leisure travelers don't pay for. Now, if business travel does go down in the long term, I think it's pretty safe to say that it'll take a long time for these airlines to recover. But let's go ahead and analyze how the demand will be affected. According to some of the major players out there, all of which have more knowledge regarding this than I do, business travel is going to take a long time to come back, and in most cases, it won't come back at all. Bill Gates says that 50% of business travel is going to disappear entirely. The CEO of Southwest Airlines says it could take 10 years for business travel to bounce back, and many others say that it'll take years for business travel to recover, with 20% saying it will never return to the level that was normal before the pandemic. Now, I can actually speak to this from my own personal perspective as well, because I actually have a day job that required weekly travel to different destinations across the United States before the pandemic. But I actually haven't gotten to travel for my job since the beginning of 2020. And there's actually a travel ban in place within our company, firm-wide, that's going to go into place until the middle of 2021 at a minimum. And that's going to keep changing depending on what news comes out regarding the pandemic. Even after this travel ban gets lifted, though, we've heard rumblings that the way that we traveled is going to be a thing of the past, because we've learned so much through this pandemic. We've learned that we have all these tools and resources, and we can use all these different companies online, such as Zoom and other companies like it, that allow us to work in the digital age and can help us work remotely moving forward. With this in mind regarding the demand of business travel, coupled with the fact that the amount of debt that these airlines have taken on and the amount of additional shares that they have sold into the market, I think there are better opportunities and better stocks out there. So my recommendation is to hold off on buying the airline industry for now and go look for some of these other industries that have a better risk-reward profile over the next couple years. If you want to know what some of these stocks are, take a look at my link above at the recent video that I posted about the 3 industries that I think will perform the best for the next year or 2. And of course, just a reminder to make sure you smash that like button below and make sure you subscribe to the channel so you don't miss out on any of my future content. Until next time.